Good afternoon and welcome to today's IMC Spotlight event. I'm Mark Downs and I'm the CEO of Investor Meet Company. Just by way of background, we created IMC Spotlight events because there are so many listed companies with strong fundamentals that remain undervalued and undiscovered by retail investors. Throughout 2025, we'll bring you companies from the largest to the smallest across all sectors and across all indexes. Today, we'll be hearing from a number of exciting companies, each presenting an overview of their investment case. So let's get started. First off, I'm delighted to be joined by Brad George, CEO of Orosur Mining, who will present an overview of the company and explain the significant progress made over recent months. Brad, over to you.
Okay, Mark, it's a pleasure to be here. So morning, afternoon to all viewers. This might be new to some and old to others, so I may be repeating myself, but I'll be brief. Firstly, I guess who we are. So Orosur Mining is a Canadian company. We're dual listed in Toronto and London exchanges under the same ticker code, OMI. We currently have a market capitalisation of about £35 million and about $2.5 million in the bank. So those are the key issues for any junior miner is cash in the bank. We are predominantly a gold exploration company. We have two major gold exploration projects, one in Colombia, the Ansar project, and one in Argentina, the El Pantano project. We also have a lithium project in Nigeria, but I won't be talking about that today. The key issue with our two projects is that they're large. We have very large land acreage in both of our projects, which is key for exploration success. 400 square kilometres in the Mid-Cauca belt of Colombia, that is a world-renowned gold belt, and close to 600 square kilometres in the bottom of Argentina in the Deseado Massif. So very key, very large tracts of land in key areas. Most importantly, as a company, we've somewhat broken from the pack in the last few months. We've spent quite some years just building our story, and all of a sudden in December last year, we began to emerge from the market. Share price increased substantially in that time, and we're beginning to get a lot more interest from larger institutional shareholders. We are a gold explorer, so I guess the first question is, well, why gold? It's a long story. Clearly, the gold price is, as we speak, at or near record highs. And I saw yesterday that the Goldman Sachs is predicting a price end of this year of well beyond $3,000 an ounce. Why is this the case? Well, again, lots of questions. Fear and greed, inflation, government debt. A lot of governments around the world are looking to diversify away from US dollar denominated investments, particularly given the US seizure of Russian assets at the Ukrainian invasion. So there is that very large amount of central bank buying going into gold. And that, of course, increases the price, which then brings in speculation, and the price then goes beyond that. So the gold price looks to be stronger for longer, but it's a very nice place to be in the right commodity. Which then begs the question, well, if you want gold, then why don't you just buy gold? Central banks are buying gold. They will not buy gold miners. The point of buying a gold miner is that there's significant leverage, both upside and downside. A gold miner has costs to mine gold, and therefore an increase in the gold price will see an even larger increase in the price of the mining company. And explorers are that times two. So it's a question of adding a bit of leverage to the gold price and playing the game in a different way. And also, of course, by buying listed shares, it's a far more liquid asset than having to bury gold in your backyard. But of course, with reward comes risk. So that leverage does not come without a price, and upside and downside. We, of course, are a small company. We're not mining, we're exploring. Now, the issue, I guess, what makes us different is that at the moment, I guess, in Australia, Canada and the UK, there are probably close to 2,000 small mining or exploration companies. Now, without wishing to be harsh to my fellow miners, 90% of those are or have no assets of any value and probably never will. It's the 10% of those companies that make up all the value proposition in the junior mining space. And we'd like to think we've moved into that 10%. So the question, I guess, is, well, how do you tell the difference from one company from 10% to 90%? And that's really a question of geology. The point I make to any investors is that we're not making a product. We're looking for what's already there. And so geology ultimately always rules. It's either there or it isn't there, and we can't change that. So in a junior mining space, we move from the beginning of a concept. A junior explorer might have an idea as to what might exist in an area in terms of what they see on the ground. But then we have to drill, and the drilling will prove whether that concept's true or not true. And we've moved from the concept to the proof of concept. We began to drill at our project in November, and we've had nothing short of spectacular results since then. We've drilled 11, 12 holes. Every hole we've drilled has come back with quite astounding intersections of gold, high grade, from the surface. So we're at that very exciting phase of moving from a concept to now proving the concept. And now we move into phase 3, 4, 5 and 6, where we spend the next couple of years proving the concept, proving the size, identification of size, feasibility, economics, and moving forward. So we're at that very interesting phase and very exciting phase of having moved from nothing to there's something there. Now the question is, well, what is that something? This is our project in Colombia. We're just to the west of Medellin in northern Colombia. We have had the project for some years, but up until last year it was owned, or it was run by some very large JV partners, Agnico and Newmont, which is the world's largest and third largest gold companies. They're leaving Colombia for political reasons. We reassumed control in November and we began to drill immediately. And as I said, every hole we've drilled from that point to now has come back with a little short of astounding results. So that's got us noticed. The way the world works now, social media and communications, where the phones began to ring from people wanting to invest, wanting to give us money, which is a nice problem to have. So it's been a very exciting couple of months, but it's all happened very fast. So we're still getting a head around where we go from here. But as I said, it's a good problem to have. The key, I think, is to what's getting everyone excited is that, yes, the results we're getting are very exciting, but the question is now being asked, well, how big is this? And that's the question that will take some time to answer with drilling. It will take a year to drill. We've taken some geochemical samples across the surface, and so did our previous partners. And what we're seeing is that the area we're drilling is about a quarter of the area that we're seeing as being highly anomalous with ground geochemistry. Not certain, but what we're now seeing is that potentially we're seeing several times larger area of interest than we're currently drilling. So highly exciting, but we need to get up there and prove those concepts and begin to drill. So the next few months are going to be very exciting for us and investors as we move forward into those new areas that are as yet untouched, but the ground geochemistry is really looking quite exceptional. And then to the south, we have another project which is not as exciting. It's a much earlier stage. It's still the concept stage. We've been there for a few years. Again, this is a key mining district. There are gold mines down here owned by Newmont and Anglo Gold and the big companies that are absolute monsters. And we went down there 3 years ago when nobody wanted to be there. Argentina was a troubled country. Gold wasn't as sexy as it is today. And we picked up a large tract of land down there with some very exciting geology. And we've been quietly, over the last 3 years, just doing the background work, mapping, sampling, doing ground geophysics. And now to the point where we think there's something going on there. No proof of concept yet, but what we're seeing on surface gives us as much comfort as we can muster at this stage that there is something there. There are some geological processes going on that we believe could be very interesting. So we've just completed the phase 1 of that joint venture. We own half of it now, and we'll move forward to working there in the next couple of weeks. So we'll have 2 projects running in parallel. We'll have the project in Colombia, which is very exciting, more advanced, and now moving into the definition and size definition phase. This project could be bigger, but early stage. But again, having two projects running in parallel is extremely attractive. Where I think this positions us in the gold market is that what commodities are in favour changes year to year. I mean, lithium was popular a few years ago. Now it's gold. What the companies lack is good projects. And we, as much by luck as design, have found ourselves in the possession of 2 absolutely world-class gold projects at the moment when the gold price is going nuts. So we're in a very good position at exactly the right time and producing exceptionally good results. And as a result, the share price is showing the response to that. So we are being noticed in the UK, in Canada, in Europe, North America in general. So we found ourselves very popular, which is a nice problem. The question, I guess, is what happens from now? as I said, we can't control what we find. And so what we do depends on what we find. And every day a new drill hole goes in and we adjust our workflow depending on what we find. But really it's just simple. We have one drill rig in Colombia at Pepas Prospect. That will stay. We will just drill and drill and drill, and that will stay there for a year. And we will do a hole every 3 or 4 days. So over the course of the next 6 months, the size of Pepas Prospect will begin to become better known, and that will move into, we hope, into the more economic phases of feasibility and other studies. So that's simple there. And we begin to then get that to the point where it's defined by all international standards of size and grade. So really it's just keep it simple, do the work in Colombia, do the work in Argentina, and just give this consistent level of high quality news flow over the next 6 months. And we move from there, and having a good project means that the world will keep paying attention to us. So that's who we are in a nutshell. I'm happy to expand to anybody who wants to give me a call or give me an email. My contact is there. I'm in an odd part of the world, time zone wise, but I'm always happy to expand to those who have any additional questions.
That's great, Brad. Thank you very much indeed. Obviously, lots of exciting opportunities in front of you and in front of the company. I guess just to wrap up with, if an investor on today's call was to look back in a year's time, what progress do you think you'd like for them to see?
As I said, it's a difficult question because we don't know what we're going to find. But all things going well, I'd like to see that the Colombian project is much more advanced. In a year from now, we know roughly what we've got, or at least we know it's economic, that we've passed the hurdle. Yes, this is going to be a mine, and that's a key hurdle to pass at some point during the course of the year. It goes from being an exploration project to yes, there's a mine, and that's the objective. And then it's a question of, well, just how big is it going to be? So more information, more drilling, more metallurgy, more permitting, more feasibility work. We would like at the end of the year to have the market accept that yes, this has moved from exploration to there is a project there. And hopefully too, we would like by then also to have some drilling in Argentina that demonstrates that yes, that's gone from concept to proof of concept. So subject to geology, but if all goes well and we see all the right signs, that's our objective.
Brad, thanks ever so much. If you'd like to stay updated and be automatically invited to Orosur Mining's future investment presentations, then please just simply respond to the poll below now and we'll take care of the rest. Next up, we've got Cleantech Lithium. I'm delighted to be joined by CEO Steve Kessler, who will break down their investment case and the exciting opportunities that lie ahead. Steve, over to you.
Yeah, great. Well, I'm very pleased to introduce Cleantech Lithium, which is a very exciting opportunity to enter the lithium space in the new energy transition world that we're going into. Usual disclaimers. But we're in Chile. Now, Chile is a mining country, great infrastructure, both physical infrastructure, human infrastructure, lots of technical support there. We listed on AIM in 2022. We've been undertaking considerable work in terms of drilling to define the resource. We've done scoping studies on some of our projects. But it's very clear to us, and from one of our major shareholders, Regal Funds out of Sydney, Australia, that the real market for natural resource stocks today is Australia. Now, there's deep pools of finance available for resource development companies, and in particular lithium. There's about 35 lithium companies in Australia. There's about 90 odd analysts, so they understand the lithium space. So we are progressing with a dual listing on the ASX. We're working on the prospectus and aim to complete that process very, very shortly. And we believe that's going to have a good effect on the share price of Cleantech Lithium when people see the value in our company. So what we have in Chile is a portfolio of projects. We have two advanced projects, Laguna Verde and Viento Andino. Scoping studies have been done on both at 20,000 tons a year, very robust economics. We've decided to spend our limited capital in advancing the most advanced project, which is Laguna Verde. It's in pre-feasibility study now, due to be completed at the end of Q1. It's led by Worley, very experienced in Chile. We have a couple of other exploration projects, but where Chile is very interesting is that it was the second largest lithium producer, was the largest lithium producer in the world. It's the second largest now, with production from the Salar de Atacama. The government's very clear that it wants to get back to being the leading producer of lithium. There are many more salars in Chile, which can be made economically viable, particularly using the technology we're introducing into the country, which is direct lithium extraction. The government has reviewed a number of sort of expressions of interest to take part in the private sector investment in Chile, and it's nominated 6 projects to have the highest priority, including our Laguna Verde project, which is clearly the most advanced lithium project in Chile. When we look at the situation with lithium, people always say, but why should I invest now? The lithium price is low. It's been hovering around $10,000 a ton, which is way below what it was 18 months or so ago. But the reality is that the growth in demand for lithium continues at a very high level. There's a massive take-up of electric vehicles in China, other parts of the world, a bit slower in the US. But every analyst now is looking at this current sort of market balance to be over within a year or two, and then a very strongly emerging structural deficit in the lithium market, which will need many, many new lithium projects to come in. And most analysts are forecasting that to get these projects away, to get the financial support for those projects, they need an incentive price somewhere north of $20,000 a ton. So we expect to see, perhaps from later this year into next year, a strengthening lithium price, which will support the share price of lithium companies. And what we've seen is the majors beginning to enter this space. Now, 2 years ago, it was only China investing in lithium upstream projects. But as this structural deficit is emerging, majors such as Rio Tinto have stepped into the space. They acquired Rincon in Argentina 18 months ago, and only recently, last week, finalized the deal to buy Arcadium Lithium for $6.7 billion. So Rio Tinto is firmly believing in the long-term future for lithium. French company Eramet is developing the first direct lithium extraction project outside of China in Argentina, and it's coming into production as we speak. Eramet also investing in Chile in exploration for new lithium deposits. So if we look at our project at Laguna Verde, we have a dominant license position in this area. We've been, say, drilling for the last two years, and working with the well-known hydrogeological consultants, Montgomery and Associates, who are the most experienced in Latin American lithium brines. We recently declared a resource of 1.63 million tons of lithium carbonate equivalent, so a very significant resource. But Montgomery have recommended further drilling, which can significantly increase that resource further. As I say, the pre-feasibility study is underway with Worley. It's well advanced. We've finalized the location for the project site, which will be the DLE and the concentration happening at the project site, and then transporting concentrated lithium chloride eluate down to a conversion plant, which will be at the city of Copiapó, which is a mining center with tremendous engineering and technical support for projects. Chile, as I say, is great in physical infrastructure. There's an interconnected grid. We plan to connect into the grid, which is currently about 60% renewables and increasing. And we aim to have a power purchase agreement for 100% renewable energy, so that we can provide low carbon green lithium into the world markets. If you look at direct lithium extraction, it is a step change from the conventional evaporation ponds. There's been quite a lot of community concern with the use of evaporation ponds in Chile because of its large environmental footprint and the loss of water from the aquifer. When water in the Atacama, the driest desert in the world, is a scarce resource. So what we do here is to pump the lithium-bearing brine from the aquifer, absorb the lithium onto specifically designed adsorbent, and then re-inject the spent brine back underground so that there is no loss of water from the aquifer. So apart from being much more efficient in terms of footprint, not wasting water, the technical performance is also much better. We're getting 95% recovery of lithium from the brine compared to the 45% you get from evaporation ponds. And from when you pump to when you're producing lithium carbonate, it's 1 to 2 days, not 12 to 24 months as you need for evaporation ponds. So this method of getting lithium from these salars in Chile is strongly supported by the government. They've made it a requirement in the National Lithium Strategy that all new projects should use DLE or equivalent sustainable technologies. We have a pilot plant in Copiapó where we've been processing the brine from Laguna Verde very successfully with say high recoveries, very good rejection, more than 99% rejection of the major impurities contained within the brine. We then send in these large tankers our concentrated eluate to an existing facility in Chicago. So rather than building our own downstream conversion plant, we're using an existing facility, and we've been producing very high grade lithium carbonate. That's the white powder on the right, 99.78%, which exceeds the general 99.5% battery grade standard. We're going to be continuing to produce more material. The aim is to produce initially up to 1 ton of material, so we can introduce it to potential off-takers and strategic partners. Brine projects are at the low end of the cost curve. Our scoping study was showing about $4,000 a ton. So the brines are way down at the bottom end, much lower than the hard rock spodumene projects, let alone the high cost lepidolite operations in China. So even in times of low prices, the brine projects, including Cleantech Lithium, remain very economic. We have very strong community support. We have an alliance agreement with the 3 indigenous communities, which are in the vicinity of the project. We have nobody living within 100 kilometers, but we do have communities on the transport corridors. They've been very vociferous in front of government and saying that all mining projects, lithium projects, impact the environment in some way. But from what they've seen, the way that Cleantech Lithium plans to use direct lithium extraction, that has the minimum environmental impact, and they fully support Cleantech Lithium in getting the operating permit that we need. In terms of funding, we have good news coming out over the course of the next few months in terms of completion of the pre-feasibility study, getting the operating contract for lithium for Laguna Verde from the government, having large quantities of material to introduce to potential strategic investors. And we want to get underway with those substantial discussions to bring them in as an investor at the project level. And we're seeing, I say, a much wider group. That the car manufacturers, the battery manufacturers, the traders are all in there. We've seen the industry majors, and now we're also seeing the oil and gas majors like Equinor and Exxon entering this space as well. So we expect to get some very strong strategic investors into Cleantech Lithium. In terms of timing, in the next few months, I said this is what's going to be happening. Our first thing is the application we made for the operating contract from government. We're expecting at the end of March the announcement from government that the project will go forward into direct negotiation rather than the normal public tender system. If we meet certain criteria, which we do, we will go into direct negotiation of those contract terms. And we're pretty clear what they are, because we've seen what the sale award to Codelco has been in the past. We have the PFS to be completed to demonstrate the technical and financial viability of the project, and the ASX dual listing. And this is where we really expect to see a significant impact on our share price. Our analysts are saying we're only valued 30 to 35% of our lithium peer group in Australia. And they expect that when we're listed, we will see a significant re-rating in share price, with the good news that's coming out in the next few months as well. So in summary, this is what we have. We're in Chile. We're a mining country. It's a lithium country. We have very good physical and human infrastructure there. We're working well with our local communities. We've got strong government support for the technology we bring into the country. We believe we're at the bottom of the lithium price cycle. The only way is up. Once we're on the ASX, there'll be a very good comparison of what we have in Chile compared to the hard rock projects having to send their concentrate to China, and that's got geopolitical issues at the moment, whereas we can go directly into the market with our battery-grade lithium carbonate. We'll be bringing a strategic investor. We have a board that's got very good experience at funding and bringing major projects into production, particularly in Chile. I've done 2 major projects in Chile myself. And I think when we look at the final message is we have a very exciting opportunity to enter the battery lithium space directly, rather than having to go through China. And where we are at the moment, at the bottom of the price cycle, and going on to the ASX, I think is a very good opportunity for share price appreciation very, very rapidly for our investors.
Steve, that's great. Thank you very much indeed. Obviously, lots going on. And I guess if we were to look forward, I mean, how do you see the lithium industry evolving over the next decade? And I guess, how do you see Cleantech Lithium fitting into that?
Well, I think it's a very interesting point, because all the hard rock projects in Australia and Africa produce a 5.5% concentrate. They don't have downstream conversion facilities. China seems to be restricting the sale of that technology into Australia. So all that material is going to China for conversion and entering the battery supply chain. Here we are in South America. We're in a country that's got an FTA with a free trade agreement with the United States. We produce high-grade battery lithium carbonate ourselves into the supply chain. So as we've seen with Rio Tinto stepping into here, Eramet stepping into here, we see Exxon going into projects in the United States. Lots of interesting DLE projects in the geothermal space and the oil field brines. This is the developing region for the lithium space. So rather than the higher cost hard rock, here we have this newer technology making the brine projects way down at the bottom end of the cost curve, and going to be a major source of lithium into the future.
Thanks, Steve, and thank you for your time, of course. But I guess if you could leave investors with just one key reason to follow and look at Cleantech Lithium's story, what would that be?
Well, I think if you look at a number of risk factors, and the one I always look at is jurisdiction. Are you in the right jurisdiction? We're in Chile. It's a great country to work. It's a lithium country. If you look at the company, we have a very strong board. We are at the bottom end of the price cycle. We are fundamentally cheap compared to our ASX peer group, and I think that's a very good point for investors to get into a company.
Steve, thank you so much. If you would like to stay connected and get direct invites to Cleantech's future investor presentations, please just simply respond to the poll now, and we'll make sure that you stay connected. Up next, we have Prospex Energy. I'm joined today by CEO Mark Routh, who'll be taking us through their investment case and opportunities they see moving forward. Mark, over to you.
Thank you very much. Good afternoon. I'm Mark Routh. I'm the CEO of Prospex Energy. I'm just going to go through a few brief slides today to just go through what the current strategy of the company is and where we are. So firstly, we're an AIM-listed company. Those of you that don't know us, we're AIM-listed on the ticker is PXEN. We have a diversified portfolio across Europe, where we have 11 new natural gas wells to be drilled at different stages of permitting. So we've got 3 producing, non-operated, revenue-generating natural gas investments. Selva Malvezzi in northern Italy. We have the Viura field in northern Spain and the Romeral concession down in southern Spain. We are the only company with 2 producing natural gas concessions onshore in Spain. No other company has both of them. There are only 2 producing gas onshore in Spain. And we're operating in stable markets with investments in assets which are producing natural gas into the markets where the nations are looking for energy security. Energy security is probably paramount to any nation, second only to security of the nation and defense of the nation. So energy security is coming up on the agenda across Europe. The other point about the Prospex is we are completely debt-free, we have no warrants, and we have significant upside potential from our existing portfolio of assets. I've been asked why natural gas and why now? They say a picture tells 1,000 words, and this is the TTF natural gas price in euros per megawatt hour over the past year, from February to February. I won't go on any more about that. It is the natural gas markets are volatile. The effects of what goes up and down is geopolitical. It's the amount of storage there is in Europe. The effects and of the forward curve, the TTF gas price, are many, and there are experts far better than I that can predict what's going to happen. But you can see the trend. So just quickly onto the 3 producing assets. The main one we have at the moment is the Viura gas plant and asset that we farmed into in August of last year. We farmed into 7.5% of the company which owns the asset, which translates into a 7.24% working interest. That's in the reserves in the ground, which are more than 90 BCF, the producing wells, and the new well which was drilled at the end of last year, which has been producing, and that represents 56% of the production from the company. The second asset we have is the Selva Malvezzi production concession in northern Italy. The Selva field has been producing since July 23, and at an average rate of 80,000 cubic meters a day, net to Prospex at 31,000 cubic meters per day. We sell the gas to BP Gas Marketing into the national grid operated by SNAM, and the operator there is Po Valley Energy, the ASX listed company which owns the balance of the field, 63%, and they operate that field on our behalf. The third producing asset is the El Romeral concessions, where we have a power plant and a network of natural gas pipelines connected to the 2 wells that are currently producing from the concessions. And these wells are producing around 18,000 meters cubed per day net. That's we're about half of this, so it's 9,000 net to Prospex. We use that natural gas to generate electricity, supplying the gas to an 8.1 megawatt power plant, which is near Carmona, east of Seville in southern Spain. Now, the power plant is actually only operating at 30% capacity. We have 3 gas engines, and we can only run one of these gas engines at a time because we have insufficient gas behind pipe to run all 3 engines. So we're actively advancing the permitting of 5 new natural gas wells on the concessions, and there's been news just last week on the gazetting of the environmental impact assessment process by the national government in Madrid in order to consult with the statutory consultees in the area on the potential impact to the environment of our drilling campaign. This is a good, positive step in the process of permitting the wells. So this is a summary of the production which I've just mentioned, both in metric units and in standard oil field units. And you can see that the Viura field is now the majority of our production. Now, this slide is an estimate of the drilling timelines and the activity which we are seeing in the coming year. The thing is with drilling is that everything is really, the schedule of the drilling is driven by the permitting process, as we've seen on Romeral, which can be rather slow with the Spanish government. Now, we are due to be spudding the wells on the Viura field, Viura 3A and Viura 3B, at the beginning of April. Now, that could slip because things often do when you have having drilling campaigns. But that drilling campaign will go on through to the end of Q3, maybe beyond, in 2025. The drilling on El Romeral, the earliest I think we can predict that will happen is in Q4 of 25. And up in Italy, we have a 3D seismic acquisition happening later this year because we've got to wait for the harvesting period to complete in the Po Valley because we can't be interfering with the farmers' agricultural activity. So the drilling is going to happen toward the end of this year in Italy as well. That's a total of 11 wells. Now, my objective is to make sure that we can fund these drilling campaigns from production income. Now, I can't guarantee that it will cover it completely, but with the gas price that I showed you on the slides, a few slides earlier, and the revenue that we are accumulating from the assets, my objective is to make sure we can fund this drilling campaign and this schedule of drilling in its entirety. I can't guarantee that will happen, but that is what I'm working to do. So, what makes Prospex unique? As I said before, we have production income from 3 onshore gas projects in 2 stable European nations. We're debt-free. We have no warrants. Our overheads and costs are comfortably covered by production income. We have cash accumulating from the assets, and that is for reinvestment in the 3 production concessions where we have, as I said, 11 wells being permitted at the moment. We are technically led, and we have new license applications in progress onshore in Poland, and I hope to be able to announce soon that we will be successful in those license applications, but that's work in progress at the moment. So, this is the investment case. We've got secured revenues from existing production. We're still trading at a huge discount to our net asset value, with the target price from the analysts is some 20p. And we're trading at some 8p, as you know. We're focused on growth. We've got a diversified portfolio. Our strategy is onshore gas in Europe. So it's very important, the strategy of the company focuses on not only geography, but on product. And that's what I have achieved in my past career with the companies I founded and have been involved with in the past. So that's Prospex, and thank you for having me today.
That's great, Mark. Thank you very much indeed. Obviously exciting times ahead. I guess one question maybe we could wrap up with is, for investors looking at this natural gas and power sector, what do you feel makes Prospex Energy stand out from other companies?
Well, the main differentiator, I think, is that we have production income from 3 assets onshore in Europe, in stable European nations. That means we have our overheads covered, and if that means also that if we have to raise money on the markets, the money goes straight into the assets, not into funding salaries and overheads. But as I said in the presentation earlier, my objective is to be able to fund the drilling campaigns which are in the schedule that I showed which are just estimates of when the drilling will happen. My objective is to fund that from the production income. And if we can do that, that means Prospex is a very good investment opportunity for shareholders to enjoy.
Mark, thanks ever so much. If you would like to stay connected and receive direct invites to Prospex Energy's future investor presentations, just respond to the poll now, and we'll make sure that you stay connected with the company. Now, let's turn our attention to Empire Metals. I'm pleased to be joined by Managing Director Sean Bunn, who will take us through the company's recent developments and milestones and really what lies ahead. Sean, great to have you with us. Over to you.
Thank you for the time and having us today. Look, I think what we have to just talk about briefly here is the fact that Pitfield is truly a world-class mineral deposit, a mineral system. It's a giant of its kind. And giants are really important for the mining industry. They are by nature rare, but highly prized. And I think what's really a critical fact about this is that they are often overlooked. So we found the Pitfield deposit a few years ago, drilling in this area, and we've been drilling here for a couple of years now, and have identified what is clearly the world's largest titanium mineral system. One of the exciting things about that is that titanium is a very strategic metal, highly sought after now. It's very important for the aerospace industry, and it's very important for defence. So a lot of government interest in these types of developments, these discoveries, getting a lot of attention, particularly from the federal government in Australia, who've shown some interest in the fact that we have this unique strategic mineral deposit here in Western Australia. Western Australia, as you probably are well aware of, is a tier 1 mining jurisdiction. It's an absolute fantastic place to find an extremely large mine to bring it into development. It's we've got fantastic infrastructure. We're right in the middle of what we call the Midwest development hub of Western Australia, close to port, access to power, existing roads, rail. So really have a lot of things that have all come together to make this project, truly an exciting one. And when people talk about Pitfield in years to come, I'm sure they're going to start to think about some of the great giant mineral systems around the world. So when you think about the uranium industry in the Athabasca Basin in Canada, if you think about gold, you're talking about the Carlin Trend in Nevada. Zinc is Red Dog in Canada. I mean, these are giant districts, and they've been developed over multiple generations. So we see Pitfield as being an integrated mine to metal production. We're very excited by the prospect of taking this through to development. I'm just going to go through to the slides. So what we're talking about here is the world's largest known titanium discovery. And what we're saying is that this is a low cost, a conventional flow sheet. We're going to be making very high purity products. And as I said, our vision is to take this development all the way through to either titanium metal or to maybe a high value chloride pigment. Now, why do we call titanium critical? It's really a rapidly growing market for titanium, particularly the titanium dioxide market. It grows steadily with consumer price index. So it's a $23 billion market valued in 2022, growing steadily at just under 4% per annum. So strong demand. It's not a bubble. It's not a market that has huge fluctuations over time. The pigments are predominantly used in high-value paints and in domestic consumption So things like housing and normal population growth is driving demand for these types of pigments. So that's always moving forward. What's really interesting, though, is the titanium metal component of the market. So the metal is unique in the sense that it's far stronger than steel and much lighter in weight. So you've got this combination of a non-corrosive, highly strong metal that is valued by the aerospace industry. So most of the undercarriage on Boeing and the Airbuses, nearly all of the aircraft undercarriage is predominantly titanium steel. And steel has this titanium process has had big penetration into the defense industries. So a lot of interest from government in that sense. I think one of the important things here is that not only does the major economies, the Western economies like the US, who don't produce any of their own titanium metal, are relying incredibly on imports and recycling. And yet the main growth factor for titanium supply is now coming out of China. So there's a lot of geopolitical tension and a lot of interest from the Western world in finding a high value giant titanium system in a jurisdiction like ours. Move to the next slide. So I just wanted to come back to this giant system and why we call it a giant. Well, we've mapped this over 40 kilometers north and south, over 10 kilometers across east to west. We've measured the anomaly down into the Earth's crust by about 5 kilometers. So we've tracked the magnetics into the ground, and it continues to go down well into the sedimentary basin that we found where we found the deposit. So we released an exploration target on Pitfield last year, which ranged from between 26.4 and 32.2 billion tonnes of ore, and has a grade ranging between 4.5% and 5.5% TiO2. So effectively, that represents over a third of the world's total known resources of titanium. We've drill tested this the entire length. So there's over 117 drill holes in this deposit, and we continue to drill. We've got drill rigs up at the site at the moment, continuing to drill the resource out with the objective of producing a JORC-compliant mineral resource estimate in the next few months. Location-wise, as we said earlier, could not be better. Close to port, rail lines existing that run between the port and cross our tenements, major power infrastructure. And what's really important here is that this Midwest hub that we are located within in Western Australia, this is where WA's largest wind farms, solar farms are located. So we've got access to green energy. There's a hydrogen hub being planned in the region. So we'll have very cheap power and very clean energy to supply to the mining operation. Recently, we announced a discovery within this big mineral system, this giant, of a unusual but very valuable weathered cap. So the natural weathering above the ore body itself has resulted in the upgrading of these titanium minerals. So basically, we have almost pure titanium dioxide minerals, anatase and rutile, within the top 40 to 60 meters from surface. Every drill hole we've ever put into this ore body, from surface to the end of the hole, has encountered mineralization. So there are no waste zones. There is no overburden. Basically, a highly friable, easy digging from surface, and basically we're hitting the high-grade titanium minerals right from the start. Processing wise, well, we're basically applying conventional technology. So there's nothing tremendously stepping outside the norm or outside the box, so to speak here. Basically, we're looking at a simple scrubbing and desliming operation. We are using gravity and flotation steps to beneficiate, in other words, to produce a concentrate, raise the grade of the ore. And then what we will be doing is looking at direct acid digestion techniques to bring the titanium out of the concentrates and into solutions. From there, it's a simple case of purification to upgrade the titanium products. And what we'll be looking at doing is shipping out a very high value, high quality, pure titanium dioxide mix of products. Simply put, if you look at what we've achieved in the last 12 months, we've hit some major milestones. I talked about the exploration target being achieved. We've assembled a world-class, an absolutely great technical team with lots of experience. We've been recently joined by our new non-executive director, Phil Brummett, who came from Newmont and Freeport, a guy with a big picture, big mining company background. So we're really starting to beef up not only our technical team, the board of directors, but we're also looking to expand over the next 12 months, looking to fill roles within our strategic areas such as marketing and hydrometallurgical development, so we can move into the product side of the project. And that's where our whole focus is moving towards. We've sent the drill rigs back up to site at the start of this year. The idea is to get bulk samples with the view that we would be able to upscale our test work. So instead of doing just normal batch scale test work moving forward, we'll be doing bulk test work on industrial size equipment, full operational spirals and flotation circuit testing. The idea there is to generate as much as possible or as much material as possible of concentrates that we can digest, produce titanium products from, and then start to go out, reach out to our potential customers and others in the marketplace to see who would be most interested in securing supply from this type of project. So we're very excited by the prospect of being able to move to product development, and that'll be the main focus in the next few months. We'll have a mineral resource estimate developed based on the recent drilling campaign that I mentioned. And one of the other key things is we'll be able to quickly now move to a process flow sheet development phase, which will allow us to design and cost up a pilot plant. In terms of our structure, the company itself, we're well cashed up. Back in September last year, we were cashed up with £4.8 million still in the bank. We are looking at how that money will continue to last. We've built a runway, if you like, to get us through this critical development phase. So the exploration drilling, the development test work we're undergoing now is all fully paid for. We've had strong support from our shareholder base, which we're pleased to say, and we're starting to see some bigger individual type shareholders starting to come onto the register. That makes us feel that the recognition that we've been looking for in the market is finally coming our way. I mentioned the build-up of the board and the technical team. I think it's really important that we highlight that our chairman, non-executive chairman, Dr. Neil O'Brien, has been guiding the company now for many years. He was the ex-senior vice president for London Mining. And our financial director, Greg Kunzel, has also been with the company, one of the founding directors of the company for many, many years. So the company, the board has been not only a strong board, but it's been a stable board now for, certainly the last 4 or 5 years since I joined back in 2021. in a nutshell, I think what we have to reflect on is that these giant mineral systems don't suddenly just happen. They don't suddenly come around. As I said, they're rare by nature. They're hard to find. They're easily overlooked. But when you have one, you are truly in a position to take these types of projects all the way through from discovery into major development. And that's our intention. We're looking for a long life mine here at Pitfield. We're looking to take advantage of the fact that the titanium industry is desperately seeking a stable, long-term supplier from a tier 1 jurisdiction such as WA. We're very confident that as we move forward that we will be able to continue to get government support in helping us develop this through these early phases. And we're very interested in talking to markets, market off-takers or potential partners as we move forward, once we've been able to produce some product and start to send out product samples for those groups to be testing and having a look at how Pitfield could become an important supplier to their for their needs. So in a nutshell, I think we've come a long way in the last few years, having made the discovery only a couple of years ago, having only taken the resource through its development phase last year. We're now rapidly escalating the test work, upscaling and moving into piloting with the view that we'll start to talk to the market about product in the next few months. And that is the rapid growth and exciting story of Pitfield.
That's great, Sean. Thank you very much indeed. That was very, very insightful. Thank you. I guess if I was to ask you one question just to maybe close up this section of the Spotlight event, where do you see Empire Metals perhaps in 3 to 5 years? And in your mind, what does success look like?
Yeah, look, one of the things that we've said multiple times is that we've never really sat still for very long. The development of Pitfield is going at such a rate. In 3 years' time, I would imagine that we would be well down the path of negotiating and being in a position to look to develop the mine. There's no really great obstacles here in Western Australia to mine development. We do have to develop the flow sheet. We do have to do some piloting and testing of the flow sheet. There will be hurdles and milestones along the way that we have to achieve. But it's not unrealistic to be looking at getting into a development phase on a project like this, such a strategic, important metal, in almost the perfect location. So lots of things in our favour. I think we will be continuing to rapidly move towards the development of this project, subject to us continuing to enjoy success in the test work and in the marketing of our product. That's what I look forward to seeing. If I had a crystal ball, I'd be certainly gazing at that.
Sean, thanks ever so much. If you'd like to stay connected and get direct invites to future investor presentations, please just simply respond to the poll now and we'll make sure that you're kept in touch with the company. Now let's turn our attention to Pulsar Helium. I'm delighted to be joined by CEO Tom Abraham James, who will walk us through the company's vision, recent milestones and the opportunities ahead. Tom, great to have you with us. Over to you.
Thanks very much for having me. And ladies and gentlemen, welcome to Pulsar Helium. As the name suggests, it's all about helium. I quite like starting with this picture. This is our Jetstream #1 well at our Topaz project in Minnesota that we drilled in February of last year. And that's gas coming out of the well, very high concentration helium. So we got off to a great start at the beginning of last year, and we're now building upon that success. So an overview of the company is that we have 2 projects. Mostly today, I'll be talking about our Topaz project in Minnesota in the USA. And then we have our second project, the Tunu project in Greenland. Both of those are what we call primary helium projects. And that is where helium is the primary economic driver, whereas most of the world's helium at the moment is a byproduct of hydrocarbon production. So a new industry, so to say. And so certainly with the Topaz project, that'll be where the emphasis is. And the reason being is that that one is more advanced. And it's in the USA, which is the home of the world's largest helium consumption as well, the largest market for helium. As a company, we've got strong news flow. So I just returned from Minnesota myself, where we've been out there drilling the Topaz project, and we've testing underway also, and more activities later this year. Then an overview about who we are and the experience that we have in helium, and certainly the very strong board that we have, and certainly well incentivized as well. With we own roughly about 35% of the issued capital of the company, and also subject to a 3-year lock-in period as well that doesn't extinguish until Q1 2027. And so to really give you that feel that we certainly are long-term believers in this company. So corporate snapshot. So we're listed on multiple exchanges. So in Canada on the TSXV, AIM in London as well. Both of those have the ticker PLSR. And then the USA are in the over-the-counter market with the ticker PSRHF. So with it, so we've got a market capitalization at the moment about 66 million Canadian dollars. And a strong balance sheet as well in terms of funding. So we have just under 6 million USD as of earlier this year. Major shareholders, so I've got myself here as number 3, chairman number 2, and then AB Crescent as number 1. So all of us, financial investors. And I guess you could say almost by design, there is nobody there with a vested interest in the product itself, apart from ourselves. Going on now to who we are. So myself, geologist background. I've been involved in the helium industry now for over a decade. Our chairman, Neil Herbert, strong financial background and certainly a long history with the resources industry. We've got Dan, our CFO, and Doris, non-executive directors, both in Vancouver at our office there. We've got John Ferrier, who's the former CEO of Gulf Keystone Petroleum. So brings certainly a strong, oil and gas background. Stu Crow, financial background, and then also Brice Loren represents our major shareholder and has a financial background also. So the roadmap to success, helium is much like many other commodities. So it's a clear pathway to get it through towards our ultimate goal, which is production. So our project in Greenland, the two new projects, we have identified helium there, and it's at the data acquisition stage. We just recently announced that we completed a seismic survey there last year and received the results of that one, which looks very positive. And then going up a couple of steps is where our Topaz project is, where it has been drilled, a discovery has been made, and we've just completed our second appraisal well there. And so certainly the next stages are to then convert that resource into reserves, have sufficient gas reserves to then justify production, go off for offtake agreements with end users of the product, and then ultimately going into production. As the name suggests with this slide, helium, it's not just about party balloons. It's certainly the use that we hear most commonly, but really it is quite an unsung hero, helium, particularly for the tech industry. So its major application is in the fabrication of semiconductors. So we hear all this talk about artificial intelligence and computing power increasing. Helium is key for that. Also used in data centers as well, increasingly. Modular helium reactors, MRI scanners. MRI scanners has been traditionally the largest single application for helium in order for the magnet to superconduct. Leak detection, because it's such a small atomic size. Space launch as well, so pressure purging in fuel tanks. Manufacturing of fiber optic cables, computer hard drives, deep sea diving. But I think the key message here is that it really much is biased towards modern technology. So what we find is on a very regular basis, there are continually new applications for helium out there. The time is now for helium, and this is quite a USA-centric slide, and it's for obvious reason with our main project being in Minnesota in the USA. But what we found is that with these two charts, I've got the right-hand side here. I'll simplify them. The first one is helium imports into the USA. And what we see is that since the beginning of 2021 through to present, we're seeing an increase in the number of helium imports, whilst the second slide and beneath it is helium exports. And so the USA being the world's leading producer of helium, but what we see is that it is in steady decline. And so that really there is an increased need for a new domestic sources of helium. And certainly that's what we're all about with our Topaz project in Minnesota. It's a very valuable commodity. So when we think about, say, other gases, natural gas, for instance, where you're looking at a unit price per 1,000 cubic feet of less than, say, $5. For helium, we've got this price here in excess of $500. Now, with helium, there's not so much of a spot market. So what we see is an average price. And helium is sold in long-term contracts. So what we see at this price here is a blend of old contracts that have been in force for a long period of time, mixed with new contracts, which are seeing a higher price. What we do see is an increase year on year, and we'll probably see that continuing as the old contracts expire and then the new ones come in. And then the global import growth, 8% year on year as well. So certainly valuable commodity with high prices. So now zooming in on our Topaz project in Minnesota, USA's newest helium discovery. So other helium sources in the USA, quite well known, established jurisdictions for gas. Whereas for us, a little bit different. We are guided purely by the geology for primary helium. And what we found in Minnesota and USA is that we're seeing extremely high concentration helium. You'll hear me say this with natural gas. We don't really talk about concentrations. You've either got the gas or you haven't. Whereas with helium, it's a bit different. There is no pure helium gas in the ground. It's mixed with other gases. But what we have is helium, which is up to 14.5% helium in an industry where really anything that's 0.5% helium or greater is deemed to be of potential economic significance. So we rank extremely highly in terms of the concentration, which has knock-on benefits for the amount of gas that you need to find to justify production, but then also most likely also in production scenarios where your operating cost may be less because you're processing less gas. So with this one, we've signed an agreement with a group called Chart Industries, which is a leading company for the design and fabrication of helium amongst other industrial gas plants. So we've aligned ourselves with really the best there is out there in terms of looking towards getting this into production. Also, the state of Minnesota last year in May, they passed new gas legislation, which includes helium, which really gives us a pathway to be able to move this project forward. And then for helium production, the key logistical items are already in place too. So in terms of production, the key consumable is electricity. We're nearby to that. There's an existing road network. Helium goes out, a final product goes out on trucks, not on pipelines. So it's important to have that road network. Obviously, being in the USA as well, the largest market for helium, it's rapidly accessible to the major market. Where we've drilled our wells, we own the surface rights, we've acquired those, and then we have leases in place for the mineral rights. This is what it looks like. So this is the Topaz project in Minnesota, and this is the Jetstream #1 well. So the drill rig here is a truck-mounted rig, and all the ancillaries on site. So when we drilled last year, we with Jetstream #1, we got the helium concentrations up to 14.5% helium, and this is a ranking here with other North American helium discoveries. It's very pleasing to see that we came in at the top. So what we did is just off that one well, and it's important to emphasize that being a new project, as with only the one well, we went off to have a resource estimate made, and we used a group called Sproul out of the USA, certainly a very highly regarded group, independent resource estimator. And they came up with the numbers here. So based on that one well, a P50, which is a chance of 50% or greater that this amount of gas is likely to be in place for helium. gross recoverable helium. And then also we were able to get a CO2 prospective resource also. And that's important because that may well be a valuable add-on to the helium. The USA has experienced a CO2 shortage as well as a helium shortage now for a prolonged period of time. A nice addition too from the resource was from Sproul. There was commentary in here that with the chance of commerciality coming in with a value of 0.65 out of 1. And so really that's very high, considering that once again, we've only drilled the one well. So Pulsar, we're off to a fantastic start at our project in Minnesota. So here is a little bit of geology for everyone. And this is building on the success of the well that we drilled last year. And so what we've just completed earlier this year, in the past few weeks, to be honest, is that what we did is we started off in January with deepening the Jetstream #1 well. And so what we can see in this drill trace here is the blue is what was drilled last year, and then the red tail on that is what we completed this year. And really the objective of that was to drill through this green zone. And effectively green is good. But what we're looking at here is a seismic image. And what we're seeing is the seismic velocity in the red is very high, it's very fast. In the green, it slows down. And what we found is that it appears that coincides with the helium-bearing reservoir. And so when we drilled last year, we just tagged the top of that. And what we've now completed is drilling through the entire section. And then what we did is we also just completed earlier this month, February, drilling Jetstream #2. And so that one's drilled alongside #1, going through once again the entire interpreted reservoir there. So they've both been completed, and now we have testing underway. And so with the testing, it's downhole logging equipment, things like optical televiewers, litho scanners, and then in March, the flow testing, and that will give us information on the flow rates of the helium and the associated gases coming out of the well, pressure testing as well, and then also further laboratory analysis of the gases that are coming out. But pleased to say that with the drilling, no formation water was encountered, dry gas, and certainly with the gas samples that we received whilst drilling, very elevated helium there, whilst albeit diluted by atmosphere with the air that we breathe. So we'll be getting pristine samples next month, and those will be representative of the helium that we've encountered in the ground. So high impact news flow. So really we're not resting on our laurels. So as I say, so the well testing and seismic acquisition is underway. So we currently have a team out there conducting more of the passive seismic, which gave us the data which you saw in the previous slide. So we're continuing to increase the footprint of where we've been operating. Once we have all the results in from this well testing, then we'll be conducting an updated resource estimation. And then after that, we'll be then looking at a economic assessment, the first of its kind, going into the public domain, and then building on the milestones that we've accomplished to date. It's quite remarkable to look at this. I mean, we've only been listed for just over a year, really, with our original listing in Canada, August 2023. And so we really do want to keep the market updated and move as quickly as possible. So this goes back to what I mentioned earlier. I touched on briefly with Chart Industries and looking towards production. We certainly are optimistic with the discovery that we've made in Minnesota. And so we're now looking to feed all the data that we're capturing to and deliver that to Chart Industries. So they're listed on the New York Stock Exchange, a large company. Most likely you've seen their equipment as well. It really is pretty much everywhere. So if you were to go to see industrial gas storage facilities and then off to the big gas production facilities and everything in between, from cylinders to production facilities, Chart really does design and fabricate the world's leading technology for this. And so they'll be looking at scenario building with the data that we give them, looking at different sensitivity analysis, and then finding out, okay, what production may be possible at our Topaz project. And then should we then proceed with that, then certainly they have the ability to then fabricate the equipment and very pleased to say that one of their larger fabrication facilities is also in Minnesota. So only a couple of hours drive away from our Topaz project. And now off to Greenland, which has been quite topical recently, but we have a project there. We've worked in Greenland for a number of years, and we are the first company to be awarded a license for helium and for hydrogen, amongst other commodities, at our Tunu project, which is on the east coast of Greenland. Helium is on the European Commission's list of critical raw materials. It's one of very few primary helium occurrences in Europe. Europe is certainly an importer of helium, and so we'll be looking to advance this one as well. And so we just completed a seismic survey last year that was successful, and so now looking to move that one forward, and then also having discussions with potential strategic partners to assist us with moving that one forward, whilst we focused on getting Topaz and realizing its production potential in Minnesota. This is really just a summary of what I've discussed, so I'll leave it for you to read through this one. But certainly, we're looking towards production with our project in Minnesota. The grades are really the highest that have been found in North America. There's a defined strategy to realize the full potential of the project. It's an extremely valuable commodity, which is something which is very finite on Earth. And there's no obvious substitution for it either. The news flow is strong, that's for sure. And we have a team that's been involved in helium. Myself and some of my colleagues have been in helium for over a decade, and then also very strong financial backing there as well.
Tom, thank you very much indeed. I guess, Tom, if we were just to kind of wrap up here for those investors on today's call looking at the long-term potential, how scalable do you think Pulsar's opportunity is?
Something that sets our project, certainly with Topaz in Minnesota, aside from many others, is that it is a brand new discovery. It is effectively open. Its potential is something that we've only just starting to realize. We've only looked at a fraction of our lease area. That's about 13% of it. So there's a lot of blue sky there. And then with that high concentration as well, it really doesn't take so much in terms of the overall gas in place to then potentially justify going into production as well. So I like to think that we have something that is quite unique to offer, and being primary helium, not associated with hydrocarbons, it really also comes with that, I guess, almost strategic element to it as well, because with existing production of helium, the producers aren't going to produce more natural gas for the sake of helium because of the economies of scale, whereas a large standalone primary helium occurrence could really bring stability to a commodity which has really been looking for stability for over a decade now.
Tom, thanks so much. If you'd like to stay connected and receive direct invites to Pulsar Helium's future investor presentations on Investor Meet Company, then please just respond to the poll now, and we'll make sure that you remain connected. Well, that concludes the presentations for today. A huge thank you to all the companies and to all the presenters for sharing their insights this afternoon, and really to all of you for taking the time to join us and to listen and engage. Your feedback is incredibly valuable. It certainly helped companies better understand retail shareholders and their views and their expectations, and will certainly help shape future engagement. So please do take a couple of moments to give us your thoughts. Thank you once again, and we look forward to seeing you soon.